Demystify, learn, BQ Learning, only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. It's Monday morning. You're watching Indian Open. I'm Neeraj Shah. Good morning, Ira.
Good morning, Neeraj, and a very good morning and welcome to a new week of news. These are our headlines this morning. Asian stocks rally as the two Koreas move closer to peace on the peninsula. SGX Nifty indicates a positive start for Indian equities. Reliance Industries fall short of estimates in the fourth quarter. Idea Cellular's net losses narrow. Aditya Ghosh steps down as IndiGo's president after 10 years at the helm. Founder Rahul Bhatia takes over as interim CEO. And the PFRDA chairman is hopeful that the finance ministry will soon allow government employees to invest 50% of their pension fund corpus in equities. That's a Bloomberg News exclusive.
Well, let's take a look at the trade setup for the day. It seems like we'll start off on a good note and shouldn't come as a surprise. Just look at the Asian screen and it's a sea of green across the screen. And the SGX Nifty indicating about 1/3% uptick as well. So we're starting off, or we're likely to start off on a note from where we left off Thursday and Friday. Remember, it was a fairly decent week as well. The new series, the first day of the new series, which was Friday last week, was also a very strong one. Typically, you don't see volumes pick up on the first day, but on Friday's session, we had a fairly decent volume build-up as well that is coming in the cash markets, to mind you. Bank Nifty is now looking like it's finally starting to play a bit of a catch-up to the Nifty. Remember, the whole of April series, the Bank Nifty was underperforming, and now the Nifty Bank seems like it's making a dash to play a bit of a catch-up to what the index has been doing, and that's giving additional support to the markets because stocks like FMCG, etc., have a step back. IT has taken a bit of a step back. You need some heavyweight counter to, or some heavyweight counters to start performing, and banks are starting to do that. Look at the month-to-date gains on the Nifty versus the Nifty Bank, and that gives you a sense of how the Nifty Bank relative to the Nifty is underperformed and now starting to move up. And as I said, that's important because Reliance too, which gave a real good supporting hand to the index the whole of last week, was up about 7%, is unlikely to provide support to the index today. You never know, funnier things may happen, but the numbers on a lot of counts did miss the estimates ever so marginally. We'll talk about that a bit later on, but Reliance unlikely to give a bit of strong support to the index. I think today we'll be watching out for financials even more closely. Two very stable large cap names, one heavyweight and one reasonably larger weight. Would be coming out with the numbers. Don't expect anything untoward, of course, and we'll talk about these as well a bit later on. But HDFC Kotak Bank coming out with numbers. Some very other interesting numbers. So CEAT, and remember the tire stocks have been fairly volatile the whole of last couple of weeks. CEAT comes out with numbers today. Diwan Housing comes out with numbers today. Arguably continues to remain one of the cheaper NBFC names, but interesting to see what it does. And the alcohol stocks at a big line, big moves a whole of last couple of weeks. They're tiny tune really, but Som Distilleries comes out with numbers. So 2 or 3 names to watch out for in terms of results. But the stocks that you would watch today, and I'm sure a lot of other newsmakers too, but it's not often that Reliance Industries results get pipped to the post by somebody. Interglobe Aviation, Aditya Ghosh resigns as president and whole-time director. News came out late Friday. Rahul Bhatia is going to take over as the interim CEO. A lot of talk about what this would do to the Interglobe Aviation stock in the short run. There are a couple of news as well about the A320 Neos and some grounded too. But the stock was down 6% on Friday. Everybody was wondering why. Now you know the reason. Let's see if there is a further downtick to this one. Reliance Industries, Q4 results marginally below estimates. As I said, the stock had gained about 7% in the run-up to the results as well. Let's see if there's a bit of a reaction thereof. Equitas, I thought the numbers looked fairly decent. Provisions have come off. The cost-to-income ratio, I think, has shown a bit of a dip as well. So interesting to see what Equitas does in trade. Fairly good quarter by RBL Bank, Nelco, a couple of names that did reasonably okay. And Jagran Prakashan is going to buy back about 1.5 crore shares, or almost 5% of equity at a price of 195, which is about an 18% premium to the current market price. Yes, I know that the acceptance ratio, etc., all of those come into play. But the point being, the buyback will happen. It's a large equity buyback that happens. It should have some impact on the stock. Let's wait and watch what Jagran Prakashan does in the session today.
All right, Neeraj, and some of those stocks that Neeraj mentioned, we're going to pick up on in First Word as well. Here's what's coming up on the editorial focus on the show. Late evening news on Friday coming in from the Reserve Bank of India that they are opening up short tenor bonds for foreign investors. Is that a smart move, or will it open up more volatility in the markets? We'll ask Vivek Rajpal of Nomura. We will talk about Reliance Industries, Petchem and retail offset the subdued refining performance for Reliance Industries. We take a closer look at the financials. Tariff cuts at the beginning of the year hit telecom earnings in the fourth quarter. Amit tells us how they stacked up against each other. And the big story from IndiGo, as Aditya Ghosh steps down, what does that mean for the country's largest domestic airline? We've got Amit Jeswani of Stallion Asset Management joining us on that. But I'm going to start off with the news that came in from the Reserve Bank of India late on Friday. They essentially made some changes to the rules on what FPIs, that's foreign portfolio investors, can buy into in terms of Indian debt. I'm running you through the rules. Remember, the money markets are closed today, so we will only see a reaction on this on Wednesday. But essentially what they've done is that in terms of government bonds, they've taken out the provision which says that you have to or you can invest only in bonds which have a minimum residual maturity of 3 years. That was a provision that was brought in after the taper tantrum, because during the taper tantrum raise, it was the short end which got hit by speculators and saw a lot of volatility, and that volatility filtered through into the currency markets as well. Now the RBI has reversed that provision, and they've said that no residual maturity restriction will be placed on government bonds. So that remains entirely withdrawn. The impact of that will be that FPIs can buy government securities or pretty much all maturities. There is a bit of uncertainty as to whether T-bills will be included. It does not look like T-bills will be included because they haven't specifically mentioned T-bills. They've only said government securities. But technically, if you're removing the residual maturity restriction, then I'm not sure why T-bills should not be included. But we'll ask Vivek Rajpal about that in a minute. On corporate bonds, now what they have said is that you can buy bonds with a residual maturity of up to 1 year. Earlier, FPIs could only invest in bonds with a residual maturity of about 3 years. The impact once again will be at the shorter end. FPIs can come in and buy in slightly shorter securities, but again, probably not commercial paper. Some other requirements that have been put in, though, is on concentration limits. So there's a cap on the single security within government bonds. That cap has been lifted to 30% from 20%, but in the case of corporate bonds, there is a cap that has been brought in and which has been set at 50%. I believe that could have some negative impact on the private placement of corporate bond issues, although I'm not sure how many of those were actually getting placed with a single FPI. I know they were getting placed with single domestic investors, but I don't know whether it was happening so much with FPIs. Now, you know, the story here is that we are going back to rules which existed in the past. The question is about the timing. What has prompted this? Was this already in the works? If it was already in the works, Neeraj, it's fine. But if this is being done because the rupee was under pressure, then it's a very foolhardy move. You know, we've seen this movie play out before and we know how it ends. So I'm hoping that that's not what it is. I'm hoping that the RBI was anyway planning this. But I do want to point out that FPI sales in April were 10,000 crores in debt, and in March it was 9,000 crore in debt. So we have had, you know, a lot of exits from the debt market from the FPI end. So I hope that that is not what has prompted this. Let me welcome in Vivek Rajpal, interest rate strategist at Nomura, joining us on the phone line from Singapore. Vivek, good morning. Thanks for taking our call. First, I want to ask you of the impact as you see. A lot of people said that essentially this helps the carry traders, putting it very simply.
Right. I think idea of this move is to help the carry trade. We have seen over the past 1 month that the curve has bear flattened, with front-end yields leading the sell-off. And this has occurred because of two reasons, actually three. One, clearly INR was under pressure, and as you mentioned earlier as well, that FPI sold bonds. Number two, supply moved from longer end of the curve to the front end of the curve. So that's the area where we had a huge supply and supply-demand issue was there. And number three, INR was under pressure. Clearly rate hike expectations have also resulted in front-end yields moving higher. Question is, will this move ease the pressure, I think, yes, in the near term, probably it will ease some pressure. It will probably reverses some of the bear flattening move that we have seen in the yield curve. Having said that, I think that's what you were also hinting, that over the medium term, ultimately carry trade then relies a lot on the global dynamics, right? If U.S. Treasury yields goes up, if oil prices continues to rise, then these things will matter much less. And then probably bonds and FPI's investors will still respond to how the INR behaves and how the rate hike expectations develop.
Yeah, and I don't know that the concentration change, concentration limits, etc. That is not going to make a difference, right? Because at the end of the day, these FPIs tend to move in herds because there is a change in the global picture or in the domestic picture, and mostly everybody reacts in the same fashion. So I don't know that that's going to help smoothen out any volatility that may come in from global shores, Vivek.
Mm-hmm. No, absolutely. I mean, I think that's a smaller part of the whole announcement, increasing the single security limit from 20% to 30%. I think the bigger deal is to allow FPIs to go into less than 3-year part of the curve. To a certain extent, we are definitely not in a 2013 kind of a scenario where India macro fundamentals were very weak. We have enough FX reserves, etc. And from that perspective, on the local front, we are much more resilient related to 2013. But at the same point of time, because of the nature of India's economy, we are always vulnerable to rise in oil prices. We are always vulnerable to USD yields going up aggressively in the longer end of the curve. And I think what this move does is it probably normalizes the supply-demand equation in front end of the curve, and near term, it's a positive news, no doubt about it, up to, for the front end of the curve. But over the medium term, it makes those bonds much more correlated with the global factors. And from a medium-term perspective, that's what worries me. Probably it makes onus even more on policymakers to ensure that the macro fundamentals of the country remain well in place.
Right, no, absolutely, Vivek. Vivek, two quick questions. One is that, is it your understanding that T-bills will not fall into this? They haven't specified. So I got two views from the market. One saying that they haven't specified T-bills, so they will be out of it. But if they've taken out the residual maturity limit, then why should T-bills be out of it?
So it's not clear to me.
Okay.
It's not clear to me. My understanding was that it is for the government securities only. Yeah. But I myself need more clarification on that.
Second point is on corporate bonds, Vivek. 2 points. One, you think the corporate, again, the 3-5-year corporate bonds will see a drop in yields because they've reduced the residual maturity there. And two, someone pointed out that, because they put in that 50% concentration limit, that could reduce the extent of private placements of corporate bonds. But I'm not sure how many FPIs were coming in with those private placement deals.
Right. Ira, do you mind repeating your question? Sorry, there was an audio issue.
Sorry, Vivek, I was just asking on corporate bonds, do you see much of an impact on the yields firstly at the shorter end?
Yes, the first impact will be positive, no doubt about it. But again, I see this relief as very tactical relief. As I said, for it to become really a strategic relief, now we are entirely relying on the global factors.
All right, Vivek. Thanks for that quick call. Appreciate you taking the time to speak to us. There you go, Neeraj. I mean, if it's a reactive move, then I don't think anybody believes it's a smart move, but we'll see how it plays out.
And it could well be a short-lived move as well.
Yeah, again, I think people have pointed out, and, the last time Vivek and I had a conversation when I think the MTM limits were spread, and both of us, I can't remember what was the trigger, but both of us were of the view that yields will come off, but yields came off and went back up so quickly, telling you that, the supply and demand and dynamics, the macro fundamentals are, pushing us in a direction of higher rates. So whatever band-aids you put, whatever sort of plastic surgery you do, the underlying is going to come right back out. So let's see how this plays out.
Yeah, no reactions today, as Ira, remember, mentioned. Money markets are shut today. We'll see a reaction on Wednesday morning. Okay, moving on from, well, arguably the most important news from the RBI over the weekend. Two news that came out post-market hours, a couple of pieces. Reliance Industries reported earnings that were marginally below street estimates. Sumit Sarkar Johnson to dissect the key takeaways behind the numbers. Sumit.
So if you see the overall numbers for Reliance Industries, they were a bit muted compared to the last quarter. Now, though revenue increased by 15%, we saw a decline in the EBITDA of close to 2% to 13,400 crore rupees. EBITDA margins also contracted to 16% compared to the last quarter. Now, if you see the net profit, however, increased by 3%, partially aided by higher other income, which was somewhat offset by higher finance cost. Now, other income increased by 61% to 2,600 crore rupees, while finance cost increased by 33% to 1,460 crore rupees in the fourth quarter of financial year 2018. Now, gross refining margin, that is the key number for the refining business of Reliance Industries. Now, that came in at $11 per barrel. Now, this was below analyst estimates. Also, its premium to the Asian benchmark, that is the Singapore gross refining margin, contracted to $4 per barrel. However, it remained in double digit for Reliance Industries for the 13th consecutive quarter. Now, because of this weaker gross refining margin and because of the 6% fall in volumes, the refining business of Reliance Industries remained a bit subdued. Now, the EBIT, that is the earnings before interest and tax, fell by around 9% for the refining business, and this is the third consecutive quarter where the refining business has seen a fall in its EBIT numbers. Now, the petrochemical business was yet again the star performer in this quarter also, and you can clearly see this from this chart, how the contribution of petrochemical business to the standalone EBIT of Reliance Industries has been increasing. It has increased from 35% in last year to 54% in the fourth quarter of financial year 2018. On the consolidated side, the retail business was the star performer. If you see the growth rates of retail business, it has been consistent and very good. In the fourth quarter, it increased by 29% compared to last quarter. This was the revenue growth, while the EBIT increased by 95%, mainly benefiting from the improved pricing post the festive season.
Okay, so that's the other businesses. What about the big elephant in the room, telecom? I mean, not in terms of revenue, but everybody is talking about watching out for the telco numbers. How have they shaped up compared to some of the others, Amit?
So if you see, Idea Cellular also came out with its numbers. So if you see the average revenue per user for all the three operators that have come out with the earnings, that is Bharti Airtel, Idea Cellular and Reliance Jio. Now it has declined for all the operators compared to the last quarter, but it has declined because of the tariff cuts that we saw during the start of the quarter. But the most of the decline was seen by Reliance Jio. Reliance Jio's ARPU, that is average revenue per user, declined by around 11% to 137 rupees per user, while that of Airtel and Idea declined by only 6% and 8%. However, Jio's ARPU remained the highest in this quarter also. Now on the operation side, if you see, Airtel's EBITDA for the India wireless business has seen most of the pressure. Now Airtel's EBITDA declined the most in this quarter, and that was because of the pressures in the India wireless business, while that of Idea Idea's EBITDA increased by around 18% compared to the last quarter because of the reversal of some of the costs that we saw in the fourth quarter, while Jio's EBITDA remained largely stable in this quarter. On the data consumption side, now the total data consumption remained highest on Jio's network. As you can see, it remained at around 5,060 million GB per month. Now this is increased by only 17%, while that of Idea and Airtel has increased the most by around 39% and 43% compared to the last quarter. Now Reliance Jio continued to add most number of subscribers in its network. Its total subscriber base was close to 18.7 crore rupees. Now this has jumped by around 17% compared to the last quarter, while that of Airtel and Idea increased by only 3% and 4% compared to the last quarter. Now talking about subscribers, the subscriber attrition rate or the churn ratio has remained lowest for Reliance Jio. Now in the fourth quarter, it reported a churn ratio of just 0.25% per month, showing the kind of stickiness among Jio subscribers. Now the churn ratio declined for all the three operators in the fourth quarter, but remained highest for Idea. Idea's churn ratio was 4.3% per month. Now Jio, which has been adding the most number of subscribers to its network, also saw the highest capital expenditure done. In fact, Jio's capital expenditure stood at 13,000 crore rupees, which was more than double the capital expenditure of the combined Airtel and Idea business. Now Airtel's capital expenditure was close to 3,350 crore rupees, while that of Idea Cellular was close to 2,100 crore rupees, while Jio stood at 13,000 crore rupees in the fourth quarter of financial year 2018. Now, because of this higher capital expenditure, the debt of the companies has also been increasing. Now, Airtel's debt increased to 95,000 crore rupees, while Jio's by close to 57,000 crore rupees. Now, Idea saw a fall in its debt because of the fund infusion that the company did in this quarter. Now, though Airtel's debt has been highest at around 95,000 crore rupees, the leverage ratio, that is the net debt debt to EBITDA remained the lowest for Bharti Airtel in the fourth quarter. It stood at around 3.5 times, while that of Reliance Jio stood at 5.3 times and that of Idea at 9 times in the fourth quarter of financial year 2018.
It'll be interesting to see what Jio does over the course of the next 4 quarters, not just to this, but to the other businesses as well. Amit, thanks for putting that into perspective. I don't know, very quickly, Amit, I mean, have brokerages by and large, what have they said? Reliance, is it hold or some, or is that the consensus?
They have remained a bit on the performance. They are saying this 1 quarter blip does not mean the bigger picture of Reliance Industries has changed. And they have also said that in this quarter, it was the high other income which helped the net profit increase compared to the last quarter.
Okay, so it's a hold.
Yeah.
Okay, great. So, I mean, thanks for putting that into perspective. Well, that aside, UPL would be the other name, a standard par set of numbers, maybe marginally off on a couple of counts. So that's the other index stock that came out with numbers and would be watched out for. But the big news, Ira, suddenly Friday evening, 8 p.m., the news flashes.
And out of nowhere, no one had an inkling of anything that was coming.
Yeah, well, somebody had, because the stock was down 6%, but it wasn't spoken about at all, Ira. You are right. I mean, nobody in the market knew or thought that, okay, the stock was down 6% because Aditya Ghosh might be stepping down. The question only is what happens next. Let's ask somebody who tracks this fairly closely as well. I would guess Amit Jeswani, founder at Stallion Asset Management, Johnson, with a quick perspective here. Amit, thanks so much for taking this early morning call. I understand you have a bad throat, won't take too long. But, you know, the stock had reacted a bit any which ways in Friday's session. It's come as a bit of a surprise. Does it disrupt operations at Interglobe so much that people who are invested in the stock would want to take a call on selling out the stock?
Hi, Neeraj. Good morning, and thank you for having me on your show. See, this was a clear-cut case of insider trading which happened on Friday. So there's no doubt that someone knew and someone just sold off 1 million shares. This is something that people should look at, and SEBI should really give answers to investors at what happened, who were the guys who were selling it. That is thing number one. The second thing is IndiGo is a clear market leader. To disrupt a market leader, historically, either the competition has to be 3-4x better. Okay, it cannot be just 10% better. So either the competition has to be really better than IndiGo, or there has to be a change in technology. So historically, if you look at Maruti, HDFC Bank, Asian Paint, even globally, unless there's a change in technology or the competition is 10x better, you can't change the leadership position. So IndiGo is going to do well going forward. But for the next 1 month, 1.5 months, you'll get the stock probably 5-6% cheaper today as well. And then there'll be some lag because some FIs or some institutions really like Aditya Ghosh a lot, and they bet the jockey. And now that the jockey is gone, they might sell out of the position and move to the jockey they like more. But, that might happen. But overall, the company should do. It's a great compounder. See, who's going to take market share away from them, right? So a SpiceJet doesn't get in planes till next year, but the planes are mostly back-ended for them. Even IndiGo is getting more planes. The airline, last month, the airline industry grew at 28%. So the next 1 week or, the next 1 week or 1 month, whatever that is, will be good time for investors to start buying. So today, if it falls 5-6%, we probably might be there in the market.
Wow. Amit, Gregory Taylor has had some past experience with Interglobe itself. He's had about 35-40 years of experience. Assuming that he's the guy who eventually comes at the helm of a machine that is a well-oiled machine and running really well, does that assuage concerns? We've not actually studied so much that who's going to come. So once they come, then we'll read about it, that who's going to. But right now, our focus is like how much can we accumulate, and if we think that and how much and what do we sell to accumulate in IndiGo, because we are not in so much cash. So our concerns are on that lines and not who's going to be the new CEO, because that's not a one-day process. This was the board meeting was there on the 2nd any which way. So there was something which happened suddenly, which made Mr. Ghosh resign. So we're just trying to understand and gather information. I believe media will be the first one to know, so we should know it in the next 1 to 3 days. So we need to know what happened, because if Aditya Ghosh is starting his own airline, then it's a very big problem. But is there an NDA? We don't know. So if Aditya Ghosh starts his own airline with taking the top management people of IndiGo, then it's not good news for IndiGo, right? But if that is not going to happen, if he has an NDA for next 2-3 years, then we can go and be a little more aggressive. Okay, Amit, we'll leave it at that. Thanks so much for taking the time out and speaking with us today. Well, that I don't know, but interesting. I was reading the JP Morgan note as well. They're saying that they are waiting further clarity, but they don't believe that this will disrupt the well-oiled machine that IndiGo is too much. Let's wait and watch.
Yeah. No, absolutely. I think we will keep tracking all of these stocks through the day, but that's all we have on First Word. Before we go ahead, we've got a whole bunch of things to flag off that are coming up later.
Yeah. So, I mean, we'll, of course, discuss all about the markets and the macros with UR Bhat of Dalton Capital Advisors. Jio is not just disrupting telecom, but it's also disrupting cable TV. And we'll speak with Mr. N Sharma of Den Networks. Both Den and Hathway have been on a bit of a roll. The management joins in to tell us how much the disruption is, if at all. And we decode the RBL Bank's Q4 earnings with Managing Director, Mr. Vishwavir Ahuja. All of that a bit later on. For now, a break and a full tilt towards the day's trade on the other side.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
What if lucky discoveries could be discovered without luck? What if the secret code to investing was no longer secret? Could the complexities of business not be so complex anymore? Decode, demystify, learn. BQ Learning. Only on Bloomberg Quint.
Welcome back. You're still watching Indian Open with us on Bloomberg Quint. Let's quickly do a check of how the Asian markets are faring this Monday morning. And clearly, it's a positive start for Hang Seng, which is trading with gains of 1.5%. Remember, the Japanese and the Chinese markets are closed in today's trading session. And well, after a good day one of the May series on Friday, SGX Nifty is once again suggesting an opening, at least a positive tick. Currently, SGX Nifty is trading around the levels of 10,761. What sort of cues one can expect from the derivative space? To take us through the same, as usual, Agam Vakil joins us. Hi, Agam. Good morning. What's the range that one is watching out for in the May series?
Well, Namneet, the range has actually broadened based on the open interest that we are looking at. But let me start off with the futures. We are looking at a little bit of accumulation when it comes to the Nifty futures, but the major bulk of the gains are coming in the Nifty Bank futures, where the underlying moved up by as much as 1.3%, 1.5%, and open interest surged 19%. India Volatility Index, on the other hand, on expected lines hasn't moved too much, around the mark of 12, and it is the same for the Nifty put call ratio as well, now at around 1.51. In terms of big changes in open interest, we did see a little more writing coming along in the 10,600 put, and this is where we are looking at base formation. In fact, 10,500 and 600 are the levels to watch out for on the lower end, and on the higher end, we are looking at 11,000, where there is a little more accumulation in the calls as far as open interest is concerned. But plenty of stocks out there which were a buzz last Friday. Balkrishna Industries moved up by as much as 1%, but 21% addition in open interest, so long as building up there. Axis Bank, the surprise move that we saw last Friday, with 9% gains coming in there, another 17% increase in open interest as well, longs there, and Namara Raja batteries among others. So we have seen about a 2.4% increase there as well. But plenty of stocks to watch out for, as well as the benchmark index, which of course as of now is showing a positive.
Interesting. We'll watch out for some of these. Agam, many thanks for putting that into perspective. Okay, that's Agam Vakil with the FNO setup for the day. But bunch of stocks, bunch of reactions to get. We've already spoken about the possible reactions for Reliance as well as Interglobe Aviation in First Word. But let's welcome on the show Lancelot de Cunha. He's Chief Investment Officer at ValueX. Joins us right now on the show with his thoughts. Lancelot, good morning, and thank you so much for being with us today on Bloomberg Quint. While we spoke briefly about what the big boy did post-market hours, Lancelot, let's talk about what do you believe were the key takeaways from Reliance numbers, and whether after a 7% move that we've seen already, is it wise to put in fresh money to work in Reliance, or do you believe that there will be better opportunities available?
Well, one is to comment on the numbers is, I've seen that I think the petrochemical business has done well. And while we didn't get too much of comfort from the geo growth, the oil and gas business was a little bit soft in terms of the refining margins, etc. But it was again a record profit, by Reliance, so that was positive. I think from the pricing perspective, since the stock has already moved up by more than 7%, at this point in time, doesn't look attractive enough to start making, investment. And maybe if there's a correction in price, then one can look at it, at lower levels. So that's probably what I would advise people to do at this point in time.
Hi Lancelot, good morning. Well, besides Reliance Industries, which definitely will be reacting to its earnings today, we also had the numbers of Maruti coming during market hours, though it was a bit of disappointment when it came to the margins, Lancelot. But overall, we've not seen any major target cards coming in from brokerages who continue to be bullish on this space. What is your view on Maruti?
Well, my view on Maruti is that it's one of the companies that is continuing to grow profits as well as sales, and actually being the market leader has been able to sustain that market leading edge. So while it makes sense to continue to remain invested, the valuations are high. So from a new investor perspective, or to put fresh money in, I think the risk reward ratio is not in favor of making an investment, because 1 or 2 quarters of slow numbers or negative growth can lead to a large re-rating potential or possibility, on the downside, and that could, impact your portfolio negatively. So I would say that it is, if you are already invested, you can remain invested because growth continues, and it's one of the fewer stocks where we are seeing sustained growth over, quarter on quarter, year on year. Whereas if you're a fresh investor, then one should wait, because there are other opportunities where risk reward is better, as well as it's a little bit high, and at the higher levels the risk increases.
Okay, Lancelot, stay on. We are also joined by the management of MCX. It's been a strong quarter for the company. Let's get in the MD and CEO Mrugank Paranjape on the show, and Sumit Sarkar from the research desk also joins in to take the conversation forward. Sumit.
Thank you, Neeraj. So, Mr. Paranjape, your EBITDA has increased around 31% compared to the last quarter. So, what has led to such a strong growth in the fourth quarter of financial year 2018?
If you look at the results of MCX, especially on the fourth quarter, there are 3 components which really have contributed to this number. The first is that the volumes, the ADT that we have on the exchange, has shown a consistent growth across, starting from January to February to March. We are very happy that this growth has sustained in the month of April as well. I think that to us has been a very healthy trend. Coupled with that, with the previous quarter, we had a little bit of a blip on our other income, which comes from treasury earnings. That has been restored as well. And most importantly, I think from an MCX perspective, we have told the market, we have told our investors that we are committed to managing our cost base in a very efficient way, and that's something which we have delivered on. So if you look at our costs other than those that are related to or directly a proportion of the revenue, those costs we have managed to a very, very healthy number, flat to last quarter. So growth in revenues, growth in other income, and a flat cost base has resulted in a very healthy growth of bottom line for us as well.
And how has been the volume growth in the fourth quarter?
So as I was saying, our ADT has grown about 17% if I compare it to the previous quarter. It's up more than 20+% if I compare it to the similar quarter in the previous year. So it's looking to be a very, very healthy growth number in ADT. It is across all segments. Of course, it is larger in energy and metals as compared to what we would have liked in bullion. But that also is the strength of the MCX bouquet of products, that when we have growth in one segment, it sometimes gets compensated for what may not happen in other segments. So yes, energy and metal leading the way, but good numbers that we are seeing across the board in all these segments.
So the base metal volumes have always been good for you, but the main concern was on the bullion volumes. How has that been in the fourth quarter of financial year 2018? What is your outlook for the financial year 2019 when it comes to bullion volumes?
So I think bullion volumes are looking up. They're not as up as we would have liked them to be. But from our perspective, we believe that as we go into this fiscal year and as we work towards getting our options contract much more successful, which we are very confident of, we will see the knock-on effect. People who use delta hedging strategies when they're trading in options contracts will also use the futures contract. The fact that the government has completely lowered the money that you pay when you're exercising options will encourage more people to use this type of product. And therefore, we are confident that in this year, we will see a better growth in the bullion segment as well.
And how does SEBI permitting liquidity enhancement scheme for commodity derivatives benefit your company?
So I think it's something which we have been at the forefront in asking for. We believe that when we want to all develop a larger market, what we need, especially for commodities where there doesn't exist liquidity across the market, or for an instrument like options, which is very new and the market needs to understand it better, you need the ability to sort of give some sort of a liquidity enhancement scheme. We really are happy with the approval that SEBI has given, on the back of which we are ourselves launched our gold options contract liquidity enhancement, and 3 days early in terms of saying that it is really very good, but we've seen very, very encouraging results in the 3 days after launch of LES in gold options.
Now, SEBI has allowed trading in options and also allowed AIFs and mutual funds to participate, and also allowed bank subsidiaries to distribute commodity products. Now, what will this incrementally mean for MCX in financial year 2019?
So I think there are multiple parts to your question. First and foremost, I think mutual funds and PMS providers are not yet allowed on commodity derivatives. This is something which is a topic of discussion. There's been widespread consultation which has happened. We are very hopeful that SEBI will soon come out with the guidelines. Even for AIFs, there remains to be some concerns, given that the custodial participation has not been fully enabled, and that's something which we are waiting for SEBI to address so that the institutional participation can really pick up. Coming to the bank distribution, yes, that is a great opportunity for us. Our view is that bank distribution is today a 30-40% of the equities market. We believe they will add at least 15% growth to the MCX business and the overall market in commodity derivatives when they come in full force over the course of this financial year.
Any new product launches lined up for financial year 2019?
So our concentration will remain on options. We will want to make sure that we complete the bouquet of products that we have. We want to make sure that all products which are eligible under the current SEBI guidelines are available for trading. That will be our first and primary focus. And beyond that, we will look to making 1 or 2 niche launches depending on which opportunities we see on incremental products within the futures basket.
Thank you, Mr. Paranjape. Thank you for speaking to Bloomberg Quint. Back to you, Neeraj.
Well, thanks for that, Amit. Let's wait and watch the impact on MCX as a stock. It's not been creating serious amounts of wealth. Let's wait and watch if it does manage to do something otherwise.
The volume growth, Neeraj, was pretty strong. Let's see if there's a positive tick coming for there. But actually, the stock's been an underperformer. On Friday, it was up nearly 4% in trade.
Let's wait and watch. Lancelot, any thoughts here? MCX as a stock?
Well, I think actually the company, recently the stock had gone down quite a bit and was trading at around 700 levels. It looks an attractive option for a turnaround in the space because there was this fear that other exchanges like BSE, NSE will also start offering commodity trading, to their brokers. And in this unified license regime, the strength of MCX will be tested, and probably they will lose market share to existing brokers, and people may give up their MCX membership. But however, I do feel that trading in commodities is a specialized skill as well as a specialized service, and because MCX is focusing on that aspect, I think they will be able to offer better value to their members. And as the volumes grow, we've seen how volumes drive larger volumes. So we've seen it with NSE and BSE. Most of the volumes earlier started moving to NSE, and thereafter it has become the premier exchange in terms of volumes. So I do think that MCX will continue to maintain its edge, and I think the results were heartening to see. And as SEBI allows more and more new products and complex products, we will see an improvement coming in from on its financial side. So from a valuation perspective, it's trading at about 2.5 times, I think 3 times book, which is fairly reasonable for an exchange. And it has no debt. It will generate cash as long as it keeps growing its profits. The cash will come back as returns to the shareholders. So I'm pretty positive on the stock. Maybe every time it corrects, one can look at accumulating it.
Okay, that's the view coming in on MCX. The numbers were definitely better than what the street was estimating. Expect a positive tick. But remember, the stock was already up 4% on Friday's session. But there are a whole host of other stocks which will be in focus when the markets open today. There were a lot of earnings which came post-market hours and also during the weekend, which will be reacting today. So let's go across to our research team. Good morning to all three of you. Darshan, let me come to you first. Welcome back. How was your trip?
It was very good, but let's see some of the stocks that will be in focus today. Not so good for IndiGo because the counter was down 6%. Aditya Ghosh has resigned. We've spoken about it, but JP Morgan has come out with a note, and they believe that the impact will be pretty much minimal. Business Standard actually reported some of the reasons why he left the company in terms of there was issues as far as this entire engine issue was there. That was something that was not carried on well by Aditya Ghosh, and that is one of the key reasons why this has happened. PC Jewelers, again, the counter has corrected significantly, up or down almost 60% on a YTD basis. Now, post the big correction, the board is considering a buyback on 25th when their results come out, along with their results. So it'll be interesting to see what the management does, whether the promoters tender in or they will abstain from getting into this buyback. Again, Fortis is another counter in focus. Now, again, on 1st of May, they said that they will evaluate all the bids, and then there will be a board meeting on 10th of May, wherein there will be more clarity that will come in. Jagran Prakashan, another buyback of 1.5 crore shares. Tata Chemicals probably will be in focus because the RBI has removed the FI limit. They said that the current shareholding indicates that the FI shareholding is below the threshold level, so FIs can again buy into the counter. And VIP Industries promoters has acquired more stake in the company, so it will be interesting. So some of the counters in which promoters themselves up the stake are something that you need to watch out for.
Thanks a lot, Darshan, for that. And Nikki, some key earnings which came out post-market hours.
I'm going to start off with Shree Cement, in line with estimate numbers, but then it lagged the sparkle that we saw in the other pan-India players like ACC and Ultratech. However, the volumes have been in line with estimates, a 9% growth year-on-year for this counter at a number of 6.4 million ton. Realization too have been in line, 6% growth that we're tracking at 4,365 per ton. EBITDA per ton has risen year-on-year basis, however, has declined sequentially sequentially by as much as 8.5%. Now, unitary power and fuel costs has weighed down on the operational performance of the company. Merck, a strong set of number reported by the company. EBITDA has risen as much as 84% for this counter, while the net profit is up as much as 53%. Now, the company has reported an exceptional gain of around 6.5 crore on sale of land in Mumbai property. But then operationally also it has been a good quarter for the company. Also, if you look at in a separate development, the company is transferring biopharma and life science business to its subsidiary for a sum of around 1,052 crore. Separately, it has formed an independent committee of directors to evaluate the open offer which has been put forward by PNG. Then other set of number is UPL. Now, operationally strong set of numbers that we're looking at. On the face of it, looks like pretty muted set of numbers. 8% growth on the EBITDA front for this counter, and the company is also expected to pay a 8 rupee per share dividend. However, the favorable product mix and the cost-saving measures have actually negated the kind of impact that the raw material prices have seen otherwise in this counter.
Well, that's the nifty constituent we'll be washing out for today. But Shraddha, some earnings from banking and financial space?
Yeah, so starting off with Equitas Holdings, a fantastic set of numbers. You had net profit coming in at 35 crores versus a number of 7 crores last year. It also beat analyst estimates of about 25 crores, as there was a sharp reduction in the gross NPA number from 4.95% in December to 2.7%. Even the non-microfinance portfolio the NPAs have actually come down. Strong numbers there. Shrey Infra also, third quarter we had seen better numbers. That trend has continued into Q4 as well. Net profit has grown by 85% to 117 crores, as provisions have seen a marginal reduction on a sequential basis. Their AUM also has grown about 25%, but disappointment continues as far as IDFC Limited is concerned. The net profit came in at just about 1.5 crores versus a number of 135 crores, and that's on account of a huge spike in the provision number. They've said that their step-down subsidiary IDFC Alternatives will sell the infrastructure asset management business. The amount has not been revealed, but that's another thing that they have said along with the numbers. Canfin Homes, again, it was a muted or a soft quarter. You had net profit growing just about 6.5%. Gross NPAs remained steady at about 0.43%, and a good inline set of numbers coming in from RBL Bank. Net profit growth of 37%. Gross NPAs have come down from 1.56% to 1.4%, and loan book has grown at a strong 36-37%. So RBL, good numbers.
Thank you so much, all three of you, for taking us through all the stocks that will be in focus. Lancelot, I want to take RBL, the conversation forward regarding that. The numbers were pretty good, and also we've got Kotak Mahindra Bank, which will be coming out with its numbers. Anything key metrics which stood out in RBL numbers for you, and what are the expectations from Kotak today?
I think RBL did come off with good results. We saw, significant loan growth, which was very encouraging, given that, with the slowdown seen in the economy and credit growth was not picking up. So I think RBL has performed or outperformed on that front. Also, RBL has managed to keep its NPAs fairly low, which is good considering that it's growing its loan book. So I think that should be encouraging for RBL, and it is growing the strategy. Like, its strategy has been to focus on areas where there is pockets of growth and be aggressive in those fronts. So I think that is playing out well for the bank at this point in time.
Okay. Now, just before we go to our technical experts, though, a couple of questions that have come on our social pages, and I think a pertinent one is Shriram Transport Finance. Lancelot, what did you make of the numbers? Optically looked a bit iffy, but deeper down maybe slightly different. I don't know if you've looked at it at all, though.
I did have a look at it, but I think this space is getting a bit crowded, and we are seeing a little bit of stress coming in on the NPAs front. So growth is definitely a little slow, and I think there are concerns about the asset quality, which will probably show up over a period of time. So this is one which we need to be a little careful of, and maybe study a little bit more in detail before taking a call on the stocks.
Okay. Watch out for Shriram Transport Finance. The Motilal Oswal note speaks about the management guidance for the 18% AUM growth in FY19, and how they've opened more branches in FY18 than it ever did in FY15, 16 and 17 combined. So they're just talking about some aspects of the growth and how I mean, they believe that some of the negatives are priced in. So different views. Whether or not you believe Motilal Oswal or Lancelot is your call. But that's one question that had come in on Shriram Transport Finance and these the deliverables. But time now for us to shift focus to technicals. And before we get to our experts, I think Amit Harchekar, Director at Index Genius Investment, is already with us, as also is Harchekar Mendonca. But before we go to them, let's just quickly get in Jayesh Khilnani from our research desk to talk about what is the Bloomberg Edge saying today. And after a really long time, am I seeing any kind of call coming in on Capital First? Jayesh, good morning.
That's right, Neeraj. In fact, even I had the same reaction when the stock name actually popped up on the screen today morning. And if you look at the chart, very interesting. In the last 6 months, it has in fact declined more than 10%. And now the stochastic indicator is giving you an early buy signal. So, you'll have to wait and watch if that early buy signal actually translates into, a proper buy signal. But let's have a look at what the early buy signal and the stochastic indicator, how it actually works. So it's a momentum indicator which actually shows you where the current price is in context to the recent high or the low that we have seen for the stock itself. So essentially it gives you when a price move is overextended. And there are a few conditions that you have to keep in mind if we can have a look at that. So there is an overbought line which is placed at 80, and there is an oversold line which is placed at 20. Now there are two lines which actually get plotted on the stochastic indicator, and a crossover between the two lines gives you the buy and the sell signal depending on the direction of the crossover. Let's have a look at the chart of Capital First. That's the 6-month chart that I was referring to, and you can see that there has been a steady decline since the month of Jan, and in fact has given you negative return of about 10 to 12% in the last 6 months as well. The bottom panel is where the stochastic indicator is. If we can zoom into that, you can see that the blue line has actually crossed above the white line, but both of them are still below the green line, which indicates that the price is still oversold. But you have to wait and watch. If these two lines cross above the green line, that's where your actual buy signal will come in. But this is an early indication as of now.
All right, Jayesh, we'll watch out for that counter today. Thanks a lot for bringing in all those details. But let's get some technical check going on the markets. And we've got Amit Harchekar, Director at Index Genius Investment Advisors, who's joining us on the show now. And also we've got Hadrien Mendonca, Senior Technical Analyst at IIFL. Good morning to both of you. Hadrien, let me come to you first. It was a good recovery seen last week. Nifty gained almost 130 points. SGX Nifty is suggesting an uptick of nearly between 30 to 35 points. What should one do when the market opens today?
Yeah, definitely the deadlock that we were seeing in the past week, that 150 points deadlock that Nifty was stuck into has finally been broken. And when we saw that, the whole range being broken, Nifty has actually broken out from this tiny bit of a pennant kind of a, breakout on the daily charts. Now that is a very positive sign, and if you come down to the Bank Nifty as well, the whole index is on the verge of an inverse head and shoulder pattern breakout. That is another positive, because if Bank Nifty is going to break out from an inverse head and shoulder, predictions are really indicating that we may see a very huge upside from here on a Bank Nifty. So as far as the Nifty is concerned, so 10,640, that was the crucial resistance on the upside in the previous week, will now turn as a point of polarity and will work as an important support zone for the Nifty on the downside. So one can keep a stop loss of 10,640 or have a 20 points cushion further, 10,620, and one can continue to remain long, on a Nifty.
Okay, stay long on Nifty. That's the view coming in from Hadrien. Amit, what about you? Are you looking to go long on Nifty futures? And I believe you've got some option strategy going for Nifty Bank for the day.
We still maintain our view that there has been massive build-up of short positions between the zone of 10,450 and 10,550. We have seen major rollover taking place at around 10,550 levels. So we believe the short positions, we expect that to move for a cover-up, and that could force Nifty all the way towards 10,900. So from a strategic perspective, we would say, again, initiate a fresh buy even at current levels. Your stop loss would be 10,670, and we are expecting a target of around 10,900. From a Bank Nifty perspective, yes, there is a very strong breakout which is seen after we have seen a strong closing about 25,300. And now it opens gate for a 1,000 points rally in Bank Nifty in the near term. So from a strategic perspective, we would advise buying 25,800 call options and simultaneously selling 26,200 call options. This would cost you a premium around 135, 140, and we expect as we move towards 26,200, the premium of this strategy would move towards 300, 350. That would be the area where one should be booking profits.
Okay, that's a strategy coming in on Nifty Bank. That's a bull call spread from Amit, and also he's looking to buy into Nifty futures. Let's also get some individual stock ideas going. Hadrien, I'll come to you first. What are the trading strategies that you're recommending in trade?
Yeah, so both the strategies are on the long side. So the first stock that we are bullish on is Apollo Tyres. The stock has been under pressure for the past 2 weeks, but Friday's move has really shown signs of an early reversal over here. So I think one should capitalize on this reversal, and one can buy Apollo Tyres and play for a target of 299 and keep a stop loss at 289. Whereas the second stock is DV's Lab. Again, we are seeing a clear extension of the higher top, higher bottom structure. So definitely one should consider buying DV's Lab even at these levels and play for a short-term target of 1220 and keep a stop loss at 1173.
Those are two buy calls coming in from Hadrien. Amit, you're looking to buy into Maruti futures. I can see above 8,850. If you could take us through the rationale behind that call.
From a medium-term perspective, the stock has seen a retracement of around 80%. And if you see the larger pattern, it has formed a bullish cup and handle pattern. So this gives you a near-term projection of around 9,600 to 9,700 from a 20 to 25 trading session perspective. Right now, we believe there has been good amount of short build-up at around 8,800, 8,850 after the weak results, and we believe that will start covering up above 8,850. So we would be initiating a buy trade above 8,850 on the future side. Our stop loss would be 8,650, and our target would be 9,300.
Amit, your one call on HDFC Bank is also there. I think you're looking to buy into futures of that.
Yeah, see, HDFC Bank carries a good amount of weightage both in Nifty as well as Bank Nifty. Bank Nifty has a weightage of around 30%, while Nifty, the weightage has moved to around 9.4%. Now, we believe current series VAP for HDFC Bank is at around 1930, and right now stock is almost trading around the same levels. We believe that this stock has been so far underperformer, and that is the reason why Bank Nifty has not able to move beyond 25,400. We believe this becomes an excellent buying opportunity at current levels. Your stop loss should be at around 1900 on a closing basis, and we are expecting HDFC Bank to test levels of 2010 to 2050 in next 4 to 5 trading sessions.
Okay, interesting. We spoke about some of the other results that came out, RBL, for example, and as well as Shriram Transport Finance, which of course came out earlier. And the other one to watch out for would be Equitas. I thought the numbers optically looked fairly interesting, so do watch out for that stock as well. Purely from a trading perspective though, Hadrien, if we look at Reliance Industries, 7% higher, kissing distance of the $100 billion market cap, but the build up to the results was strong, the results not quite strong. What would you do in trade today if Reliance starts off slightly weak?
Yeah, I think the run-up to the result was very strong, as you've already mentioned, and I think that will play out because profit booking is surely going to set in. We've seen a good build-up going towards the result, and I think eventually we are going to see a sell-on news kind of a situation over here in Reliance Industries. So I think if anybody wants to create long positions, I would prefer to see out this phase of profit booking, a little bit of price correction. If not time correction, because move from here is going to be a little difficult because we are seeing early signs of reversal. If you see 2 days back we saw a doji which was ignored and then created another doji, but then now we have again on the Friday created a hanging man. So all these signs were that profit booking was bound to happen, and I think it will happen going forward. If you get Reliance close to the 960, 965 levels, it should be a good opportunity to buy at those levels.
Hadrien, just very quickly, actually a 15-20 second answer, but when you had come the last time, you had spoken about that hanging man pattern that needs to be formed. Did it eventually happen on the indices?
I think we spoke about the three white soldiers on the indices, which we were actually looking out for. But yeah, exactly, which eventually didn't form because we didn't close at the week's high. So I think a little more upside is still there rather than profit booking.
Okay.
Three white soldiers.
Three white soldiers. I still don't know what that means, Neeraj. But Jayesh has just alerted us. Roughly around the level of 1041.5 is the mark where Reliance Industries will be hitting the $100 billion market cap. Remember, they've already hit that mark once in October 2017. But let's also keep in mind, rupees depreciated from those levels. That time, rupee was around 39.5 to the dollar. But 20 seconds to go for markets to open. SGX Nifty is suggesting a gap up opening of nearly 30 to 40 points. Let's see if we open in line with what SGX Nifty is suggesting. And if you look at the Asian markets, the start has been positive. The handover from US markets was also positive. SGX Nifty currently around the mark of 10,770 thereabouts, and we'll be getting the pre-opening rates there for you. They will be settling down by 908. Currently, Nifty showing a downtick of nearly between 10 points. Sensex looking at a rate of almost trading higher by 1.5%. But important to see how individual stocks are reacting. A lot of earnings reaction will be coming out. Reliance Industries, that's the biggie, which is in focus. Let's pull up that one, though it missed street estimates this time around on a lot of parameters. Reliance Industries is showing a downtick of 2%. Remember, it did cross the 1,000 mark in Friday's session. The other earnings will be UPL among the Nifty constituents, which just came out post-market hours on Friday. The numbers look pretty good. UPL is suggesting a opening of almost about 0.5%. Besides that, if you look at the Nifty constituents right now, ONGC is showing a downtick of almost 1.2%. Z, Axis Bank, Bharti, Airtel are a couple of other stocks which are showing a downtick. But pull up Ultratech Cement. Remember, these rates will settle down. So Ultratech Cement just in the pre-opening rates is showing a uptick of nearly 6%. Tech Mahindra, Cipla, Bajaj Finance are a couple of other stocks to keep an eye on. Lot more earnings reaction from the broader markets. I want to pull up MCX. The numbers were pretty good. This has been an underperformer for quite a while now. The volume growth was pretty positive, so watch out for MCX. And pull up PC Jewelers too. That was down 25% on Friday's session, and PC Jewelers is showing a downtick of 10%, Neeraj.
Yeah, I'm sure you marked Interglobe Aviation, but I still want to just pull it up once again. IndiGo, which was down about 6%, another 3.5% off right now. Let's wait and watch if these rates stabilize or no. Interested in seeing what Equitas is up to. I thought the quarter was reasonably okay, about 1.5% or 2% higher. RBL Bank we've already marked. What came out with maybe slightly weakish set of numbers were stocks like Canfin Homes, and let's see if there's a reaction to that stock. UPL is the other index stock that came out with numbers. And Jagran Prakashan, the small cap name to watch out for. Buyback price 18% higher than the current market price. About a 4% uptick for now. Let's wait and watch if that lasts or no. Remember, the money markets are shut today, so you'll have the first stick on the bond yields as well as the rupee only on Wednesday. Okay, now before we move any further with our guests, let's get in Shraddha Babla to talk about what to expect from the two large cap financial names that will come out with numbers today. Shraddha, HDFC, Kotak Bank, what's to be expected?
Neeraj, HDFC should continue to be a strong quarter. In fact, the net profit is expected to grow by almost 25% to 2551 crores. So strong growth on a year-on-year basis. Sequentially, you might see a big dip because the third quarter had exceptional gains of 3675 crores on account of stake sale in HDFC Standard Life Insurance. In their pre-earnings update, HDFC has also said that the fourth quarter profit on sale of investments, they're looking at 300 crores versus a number of 49 crores, and that's on account of a 265 crore gain coming in from selling stake in their subsidiaries HDFC Developers and HDFC Realty. And out of that gain of 265 crores, they've already said that they're looking to make a one-time special addition provision of about 80 crores or so. So that's how the profit number should really pan out. 2551 crores is the estimate. In terms of other parameters, spread should remain steady around that 2.3% level. Loan growth is expected to come in at about 18%. Asset quality expected to remain steady. In the third quarter, gross NPA number was at 1.15%, so should remain 1.15 or 1.2 thereabouts. Important to watch the trend in the loan growth in the affordable housing segment specifically, and also if the uptick in the corporate demand that we've seen in the third quarter continues. Asset quality of the corporate portfolio and any management commentary on inorganic acquisition will be important for HDFC. When it comes to Kotak Mahindra Bank, again, earnings will be stronger than the sector in general, because remember, their book does not really have the kind of asset quality stress that some of the other banks do. So net profit is seen 25% higher at 1221 crores. Loan growth should come in at about 23%, same pace as the third quarter. Asset quality expected to remain steady, and remember, their provision cover on NCLT 2 accounts also stands at about 65%. They have a low exposure of 300 to 400 crores. They said that in the last quarter. So incremental provisioning needs also do not remain very high. So watch out for performance on CASA, fee income, the retail SME demand and incremental margin trends, and also the performance of its various non-banking subsidiaries. But overall, steady quarter, strong quarter expected for both these BFSI names.
I don't expect anything different. And that should be good for the Nifty Bank, which has just started to play a bit of a catch-up. Thanks a lot for that, Shraddha. You know, a lot of questions about Vakrangi and PC Jewellers, and we'll talk about them as well. But since we're on the topic of the financials, Amit, how would you position yourself in HDFC or Kotak Bank ahead of the results? Would you take a trade? Would you initiate a trade this morning?
Well, definitely, as we have a very strong breakout in Bank Nifty, and even now Nifty Financial Index, even that is looking quite stronger. We can expect a good rally in HDFC Limited all the way towards 1950. Kotak Bank remains quite positive. A dip of maybe 10-20 rupees becomes a good buying opportunity. Kotak Bank, the target we have it around 1265 to 1270. So that would be the area one can start booking profits.
Okay, that's a big number which will be in focus. Kotak Mahindra Bank as well as HDFC. Remember, HDFC is a heavyweight on the index, so that will definitely drive the markets in today's trade. But Lancelot, the tire space has been in focus. On Friday, we saw MRF surging nearly 5%. That crossed the 80,000 mark. Also in terms of stock price, Apollo Tyres, CEAT have also been doing pretty well. What's your view in this space? Do you see do you expect more legs to the rally that we've seen for tire stocks in the past?
I think we will have some more, upside in this rally, because the tire companies are in a structurally sweet spot. So they have raw materials which haven't really gone up, and demand has continued to remain fairly firm. So we are seeing them, grow their sales as well as market shares, and because of raw materials remaining slow, their profit margins have been good, and they have seen significant profit growth. But one has to also be cautious that this is a cyclical industry, and raw material prices, especially most of it is imported. So these raw material prices can also begin to hit them, as well as you could see cheaper imports coming in from places like China, etc., which can dampen their sales growth. So I don't think one can, continue to pay high valuations for stocks in this space, and one should be mindful that any kind of global issues can bring down both profitabilities as well as sales. So you have to factor that risk in before making a trade on this space.
The other set of stocks, Vakrangi and PC Jewellers. Vakrangi is starting off, or likely to start off, as the pre-open rates are settling down 5% lower. PC Jewellers too, which was in the eye of a storm. The buyback news has just given a bit of a fillip to that one, but don't know how it will last. Unless, I think the simple advice would be that unless you are confident of you knowing more than what the street knows into PC Jewellers or Vakrangi, don't be a brave heart and go out and try and make money. You could well end up making money. I'm not saying no, but it might just be a difficult trade to execute if you are taking a guess, or if you're believing that because the stock has come down from 500 to about 100 or 150 or 200, whatever the price is, it might be a good buy. It need not necessarily turn out to be so. That's the simple thing. I confess ignorance. I don't think too many people would know too much about Vakrangi or PC, but that's the long and short of it. Let's give it a shot. Lancelot, any thoughts on Vakrangi or PC Jewellers?
Well, I haven't really followed both the stocks ever, so it has not been in my radar. So I have nothing really to be able to comment on these stocks.
I think Neeraj, for the stock to go up, in case if it goes up today, that's for PC Jewellers and back of buyback news. We don't have the details yet. The board is still going to consider, and I think the most important part will be whether the promoters will participate in that buyback or not. That's going to be a very, very crucial thing to watch out for. Ahead of that, just a bit of, uptake doesn't make any doesn't say anything much about the stock price. The way it's fallen from 600 levels to where it's come now, it's been a clear story of wealth deterioration so far for PC Jewellers.
Yeah, as the pre-open rates have settled, a couple of stocks are looking to start off on a good note. Bajaj Corp, Thyrocare and Merck. And I think in terms of Merck, I was just reading out a tweet from a market participant which says that Merck will transfer the biopharma business and life sciences business to a GRP entity. I don't know if that's the reason for Merck doing what it is doing, but the stock is up about 5%. However, Hadrien, if I can ask you about the two mid-cap boys which are looking to start off on a good note, one of them a Bajaj Corp, the other one is Thyrocare.
Yes, the Bajaj Corp is, actually holding pretty well above its, yearly mean, that is the 200-day moving average, and that is close to the 445 mark. So as long as it, manages to hold that, I think there would be no issues with the Bajaj Corp. As we're seeing the pre-opening rates, showing an uptick, I think its momentum would continue towards the, 480, 485 levels in the short term. So as far as Bajaj Corp is concerned, I think it's a good level around its yearly mean to actually enter and play for a short-term target of 480, 485.
Okay. 5 minutes to go before the markets kickstart trade. Let's tell you all that you need to know to stay ahead in trade today. All eyes will be on HDFC, Kotak Bank, Siet, Container Corp and Hindustan Zinc as the companies will be reporting their March quarter results today.
We'll also be watching out for a reaction for companies like Equitas, MCX, Merck, Nelco and LG Balakrishnan after these companies report strong set of numbers for March quarter.
On the other hand, it's been a weak quarter for Reliance, Canfin Homes, IDFC and Greenply Industries, and except Greenply, all the others starting off in the red.
While UPL, Shree Cement, RBL Bank, Shoppers Stop and Idea Q4 earnings were in line with Bloomberg estimates, we'll be watching out for reaction on all these companies.
Another stock in focus will be Interglobe Aviation as Aditya Ghosh, the CEO, steps down from the position of president and whole-time director of the airline.
Well, that's an important one to watch out today, and we'll also be watching out for PC Jeweller, the company that will be considering a buyback along with its March quarter earnings numbers on May 25th.
Lancelot, any thoughts on Interglobe Aviation? It lost 6% in Friday's session, another 3.5% on open today. Would you use this dip as a buy opportunity?
No, actually, I have always been, possibly bearish or not an investor in airline stocks because, I've seen that when you look at the business over a longer period of time, there are good periods and there are bad periods. And finally, you do get suboptimal returns from the business per se. While the stock prices might do very well, the business per se has a lot of risks as well as, then you do see this periods of long suboptimal performances, which will impact wealth creation. So I am not very positive on this. So I really can't say whether, it's a good buy or not because I don't really invest in the airline stocks per se.
Okay, well, there are some headwinds surrounding these aviation stocks with regard to higher crude price and also rupee depreciation. Let's see if any money moves towards companies like Jet Airways and SpiceJet because they've corrected more than what we've seen for Interglobe. I think that's come off only 10 to 11% from its top. But Axis Bank, let's not forget that was a company which surprised all of us on Friday when the market opened. The numbers were not so good, but the stock was up nearly 9% in trade. Hadrien, on the charts, would you take any trade here?
Yeah, given the strong up move that we've seen, irrespective of what the results were, but we are seeing a move that has actually covered almost 7 to 8 trading sessions downfall, and that is a very huge move. Ideally, we'll see a little bit of consolidation, but then this initial move is indicating that we may see further upside from Eurodin and Axis Bank. I'd not recommend to enter right now, and jump off a trade at this moment. I'd wait for a little bit of time correction before we enter in Axis Bank and play for an upside target of 565, 570.
Interesting. Okay, and of course, amongst the losers, I think RIL and ONGC and Z Entertainment are likely to start off on a slightly weak footing. On that note, actually, Lancelot, we'll let you go. Thank you so much for taking the time out and joining us this early on Monday morning. Appreciate your time. Just minutes to go before the market kickstarts trade. Hadrien, just one quick thought really. Any trades on the Nifty or the Nifty Bank? Nifty Bank looks like starting off about 100 points higher.
Yeah, Nifty Bank, as I already said, is on the verge of a very strong inverse head and shoulder, breakout. And I think, the 1,000-point uptick that Amit spoke about on the other side is actually on the verge. So we'll have to wait and see if we close above this previous top of 25,430, 25,440. Once we see that happening, definitely we'll see a very strong up move. And I think PSU banks, the forgotten one, who doesn't, anybody who doesn't want to touch PSU banks, would I think is going to play a very big role in this up move in the Bank Nifty.
Amit, very quickly, looking at the pre-opening rates, what is your top trading call for the day?
Well, top trading, as we discussed, SDFC and Maruti are my favorite, but I would also look for ITC at current levels. Again, a strong consolidation at 274, 279. We are expecting target of 310. So would recommend buying even in the opening rate with a stop loss of 272 for short-term target of 288 in today's trade.
Okay, so ITC from Amit Harchekar. We'll take in Hadrien stop call after market kickstarts trade, but this is how the markets are starting off today. About 1/3% for the Nifty Bank. I think that's the one that's making a noteworthy move. The last 2 or 3 sessions, the Nifty Bank has been outperforming the benchmark indices, which is the Nifty and the Sensex. But about 1/4% for Nifty and Sensex too, so not a bad start. I would reckon the mid caps and the small caps also have a marginally positive start. Actually, 12.4%, not a bad start. A fair bit of green on the screen. I would presume the heat map should come up. Yes, fair bit of green. Axis Bank and Reliance, the top 2 losers. Aside of that, not too many worries. ONGC too, so upstream doesn't seem to be having a good start. On the other side, banks have support. Yes Bank, SBI, HDFC too ahead of the numbers is up about 1%. Can't see Reliance, Reliance as the top loser, but can't see UPL somewhere. It should be somewhere here. It came out with the numbers too. Ordinary set of numbers, so no big reactions anticipated any which ways for UPL. That's lying somewhere out there. Yeah, about 1/3%. So no big moves here for UPL either. Let's focus on what are the key names to watch out for. We're starting off with positive market breadth. In fact, the Nifty is now up about 0.5%. So it's a good start to the Indian bourses. IndiGo, Aditya Ghosh resigns, but IndiGo after the 6% downtick sees some green on the screen. This is interesting. The market seems to be digesting. Let's wait and watch the early days yet. Let's see. This could well be some reactions, but these might change as well. It's a good quarter for all of these. RBL Bank though starts off marginally lower, but Nelco as well as Equitas having a very good start, about 2.5% higher. So good moves for these ones. What about the companies that have come out with not so good a quarter? Canfin Homes, for example, or IDFC or Greenply. Say for Greenply, the other two start off marginally lower. Last but not the least, aside of results, the key results today that are anticipated, and all of them starting off marginally higher. Namneet, what are you spotting?
It's a positive start for the broader markets as well, as Nifty is already inching very closer to the 10,750 mark, 0.3% higher for the Nifty mid-cap index. I just want to first do a check on a couple of result reaction. Pull up Shree Cement. The numbers disappointed the street a bit because the realizations this time around were not so good, but nevertheless the stock starting on a positive note. Equitas is the other one where the NI was up nearly 15% for this quarter, and that one's opening with gains of 20%. IDFC came out with its numbers. The net interest income for the quarter was down nearly 7%, and that's just a flat opening coming in for this one. MCX, remember the volume growth this time around was pretty strong. Let's see how that one is reacting. It was up 4% on Friday, but this morning you're seeing only 0.7% tick, and 800 is the mark where MCX is currently trading. Idea numbers were better than expected, though the company continues to post losses. Idea is opening with gains of 1.5%. Besides that, from the broader markets, you had something like LG Balakrishnan, that too came out with strong set of numbers. Margin improvement seen there, 5.5% higher for LG Balakrishnan. Pull up Merck, the numbers were pretty strong, and I can see the stock also reacting positively for Merck. It's almost up 8% in trade. The EBITDA was up 84%, and major improvement seen with regard to the operating performance. The other one which is up in trade is Bajaj Corp. The numbers came out last week. I remember having a conversation with the management, and they indicated that the volume growth for the quarter was nearly 5 to 6%, but the stock is actually reacting in today's session. That's up 4.5%, and I think IT is back in action. NIT Tech is up almost 4%. Thyrocare also reacting to its numbers. That's trading with gains of 3.5%. On the losing side, well, you've got stocks like Vakrangi, which continues to be locked in lower circuit. And I just want to pull up PC Jewelers. That was down 25% on Friday. Some bit of respite after that news of considering company may look to consider buying back its shares on May 25th alongside its earnings. PC Jewelers is trading with gains of 3%.
Okay. So 2 or 3 names to watch out for, or in fact multiple names to watch out for. But mind you, the banks are looking fairly strong. SBI and HDFC are amongst the top movers, and IT has made a bit of a comeback. HCL Tech, TCS, Wipro, Tech Mahindra, all three, in fact even Infosys are up and about. So banks and IT participating, that takes the indices higher. Hadrien, opening thoughts. We didn't take your top call for the day as well. So maybe that and any other thoughts that you have in terms of trade on the indices.
Yeah, so State Bank of India, as I already said, that the PSU Bank this time around would have a very important role to play in lifting the Bank Nifty and the Nifty higher. So I think I'll put my bet on a State Bank of India, a safe PSU Bank in my opinion. Even at these levels, one can enter and play for a short-term target of close to 255 to 260, and one can keep a stop loss at around 240 on the downside.
Okay, that's the view on SBI. One more earnings reaction. I think we've already highlighted Merck, but I think it's inching really higher in today's session. Let's just pull up Merck once again. It's up almost 8% in trade now. 2055 is the level, and as Neeraj highlighted, IT seems to be back in flavors. Even Mindtree has surged almost 3% in trade, Neeraj.
Well, interesting names. Amit, anything that looks interesting? IT is making a bit of a comeback.
Infosys is the one chart which looks quite interesting after of 20 trading sessions of consolidation. We think there's a bullish flag pattern which is about to unfold, and that could take stock all the way to 1325, 1340. So Infosys is the one stock should be bought into on every dips.
Okay. Gentlemen, many thanks for joining in this early in the morning and giving us your thoughts. That's the view from our technical experts on trade, and the trade is looking fairly solid. You are Bhat, Managing Director at Dalton Capital Advisors, joins us on the show. What a difference 20 days can make, Mr. Bhat, or 20 trading sessions, if not 20 days.
Yeah.
But we are kissing distance of new highs, I mean, whatever, 400, 450 points.
Yeah.
But it's been a strong rebound from the 1900 levels.
Absolutely. I mean, given the fact that internationally things are not exactly in great shape with the trade wars sort of playing out, with the summit, the US-North Korea summit, just some days away, and there could be any outcome there, and then Brexit and the problems we have in Middle East. I think the temperature there is going up. So all these can contribute to, and FIs continue to be selling. So all this, despite all this, the market has really shot up quite a lot, and just about 4% away from all-time highs. So I think there is a lot of sort of steam based on domestic factors. Inflation is under some control, except for the foreign trade problems that we have. Other than that, domestically things look okay. There is a lot of economic activity. All the indicators seem to be suggesting that things are getting to be better. Quarterly results, of course, the first few results are always good. So they have come, but now we have to see how this shapes up.
But if the yields are to be believed, Mr. Bhat, there is a higher probability of interest rate hardening or not softening at all. Does that worry you?
Well, I think that is factored in. It is not exactly news. So I think with the US interest rates nearing 3%, so therefore I don't see any reason why domestic interest rates would soften. It'll, if anything, harden. So I think that is more or less factored in, but I think the government is taking some action with the FIs being allowed at the short end of the market, of the debt market. I think that might actually cool temperatures a bit.
Mr. Bhat, I wanted to take that point forward. We've seen a good recovery of almost closer to 700 points now, but FIs have been absent from here. They've been continuing, they continue to sell in the cash segment. Do you think if this trend continues, it can be a sign of worry, because we're in for a lot of volatility? We've got now state elections lined up this year.
Well, I think, you see, the sort of selling that we've seen over the last few days, or last few weeks, in fact, that I think can be absorbed by domestic inflows, domestic institutional inflows.
Do you see that trend continuing? Will they? Because that was the trend last year also that we witnessed.
I think domestic institutional flows would be of this order.
Okay.
They can absorb, probably less than $1 billion of FII outflows every month. But more than that, I think if it is double or triple that, then I think there is certainly going to be issues. But as of now, I think the selling is not very, very robust.
Right.
So therefore, I think that is getting absorbed. As far as domestic institutional inflows are concerned, I think that they continue to be reasonably okay, even though they have sort of softened a bit. But I don't think they're really gone the other way. So I think things are in reasonable equilibrium as of now. But I think something can give any time.
Well, they've been selling in the debt market as well. I think FIs for the month of April have sold nearly 10,000 to 11,000 crore in the debt market.
Also March.
Yes, also March, yes. And that's, I think that worry of rising crude prices, even rupee has been depreciating. But let's shift focus and talk about the earnings, Mr. Bhat. The biggie Reliance Industries, which came out with the numbers. Some bit of disappointment, but the brokerages do maintain their, bullish stance on it. What have you made of the numbers there?
Well, I can't really talk of specific stocks. So, but generally, I think the market was probably expecting better results than this.
Okay, you're not going to talk stock specific. Okay, so I'm going to talk about the oil and gas space, where the crude oil prices have been inching higher. How should one play this space now? The oil marketing companies are on one side, and you've got the upstream companies.
Upstream companies, I think they would continue to do well. Oil marketing companies, they have been able to pass on price increases till now, except probably for the last few days. And post May 12th, I think that also should happen. So I don't think that's a big issue. I think they would continue to do very well. I mean, both on the production side as also on the distribution side. I think they would continue to do well.
Okay. I was looking at companies which certainly seem to be doing well. From the small cap end, the jute companies continue to rise and shine. I don't know if the plastic ban in Maharashtra leads to that, and Darshan was tweeting about it. But Mr. Bhat, pockets which are hitting new highs consistently, very strong moves, not just today, but they've been doing this for a while now. And mid-cap IT features there. Mindtree's at 1100, NIT Tech 1200, a couple of other names doing well, KPIT Tech 251. There has been a phenomenal rally in mid-cap IT. Yeah. Does the commentary and the earnings that these stocks have come out with give you confidence that the rallies could continue and the valuation multiples can sustain?
Well, I think it's largely because of the rupee weakness. The market immediately takes a view that exporters should do well. But I think the pricing is always factoring all this rupee depreciation. But pricing adjustments don't happen every now and then. So it happens probably once in a year or twice a year. So till then, I think there is certainly some amount of upside on account of that. That is what is factored in current prices. But generally, if you really see the mid-size IT companies are doing better in the market than the large ones, except probably the biggest one. But so generally, I think there is certainly some space that is being created for specialist sort of IT companies, which are not the generic variety that you see, the big ones. So I think they have carved niches for themselves, and they might actually continue to do better than the large ones, because sustaining that growth momentum with that large base is proving to be difficult for the big guys.
Okay. The other set of companies which have started to move up, Mr. Bhat, are the SFB stroke microfinance companies, Ujjivan, Equitas. The numbers seemed reasonably okay. They're coming off of bombed out valuation levels as well. Is there merit in trying to own these names? I mean, did you like what the companies have done over the last couple of quarters?
Well, I think their conversion into banks, I think they've handled that very well. Okay. So I think that continues to be a source of some strength. Their capability of managing the transition well. And generally the public sector banks are in doldrums. So therefore, I think there is a lot of business out there for everybody other than the public sector banks who have capital, who have some management depth. I think they can capture this market, and they are also profiting from that. But I think they particularly suffer from issues when elections come up about loan waivers and stuff like that. That affects them a bit more, because they are in the hinterlands and they are largely in the small ticket businesses. That's where I think the credit culture gets hit once there is talk of loan waivers. So I think that is some risk that you have to always be mindful of. But otherwise, I think they've given a reasonably good account of themselves.
Okay, that's the view coming in on the NBFC as well as the banking space. Just pull up Som Distilleries, the numbers come out today. And remember Pioneer Distilleries, the counter which has been locked in upper circuit for the last 2 trading sessions on Thursday and Friday. Once again today, it's shown an uptick of nearly 9% in trade. Well, Mr. Bhat, there is some traction which is now being seen in liquor space. There is some interest which is going back after, I think the Q3 numbers were a dampener after a good Q2. But are you looking at this space closely?
I couldn't hear which was
the liquor space.
Well, I think that's a space which a lot of people seem to be very keen to hold.
A lot of buying of late has been seen in stocks like, you know, Pioneer Distilleries or be it Radico Khaitan as well.
So this is a consumer space that's always going to be interesting, I think. But this is one space where one has to be always mindful of government intervention, because these are all sort of policy-led interventions are possible. So therefore, one has to be mindful of that. But otherwise, I think they are in a good space, and there is a lot of consumer demand. This culture of drinking is catching up. So therefore, I think they continue to do well.
Looks like you're not a liquor fan.
I am not a liquor fan, certainly not. But the point is that that consumer is really sort of giving it a leg up. But I think at some stage you can always see that there is some intervention, policy intervention every now and then. So one needs to be mindful of that.
Okay, that's a pertinent point. The other space, Mr. Bhat, which is doing well of late, is the specialized retail space. And I mean, what I'm trying to say is that the future retails of the world are not hitting those highs, but Avenue Supermart is, KDDL, which houses that ethos book is, Shoppers Stop, the numbers were slightly off, but the Amazon tie-up could do wonders to them. VMart or Vishal Retail, whatever you call it, also trying to do reasonably okay. What are your thoughts here on this retail space? Are there winners that can be created from here on in the wake of Amazon and Flipkart doing what they are doing, or Amazon and Walmart doing what they are doing?
Well, I think there is certainly some space for the physical retail also. There is no doubt on that. But that, I think, is probably largely to do with things like apparel. But if it is the regular sort of items that one uses for daily consumption, that is something that is probably slowly shifting to the Amazons and to the Flipkarts of the world, or to the big baskets of the world. I think that is some transition that we have to see, because I think grocery is something where there is probably going to be much more of an impact from these guys. But apparel is something that I think that may continue to hold interest for the retailers who want to go and check the fitment and then buy it. So that I think is something, that distinction we have to make. But if you really see, most of these guys have not given a great account of themselves in terms of, say, for example, the ones you mentioned, either the valuation is sky high, or otherwise they're not doing very well. So the ones who are doing reasonably well are untouchable as far as valuation goes. But the ones who are not doing well probably should not be buying them anyway. So that is, I think, the dilemma there in that space.
Interesting. My final question, Mr. Bhat, are you buying into PSU banks?
Too early, I think.
Too early?
Too early.
Valuation-wise or time-wise?
Both.
Both.
So what are you looking at? What are you looking to buy at currently?
Well, I think non-PSU bank financials continue to be doing, I mean, that is a source of some strength. Then auto companies continue to do well, even though there might be some surprises here and there quarter-over-quarter. Then you have, the consumer space looks interesting. Industrials continue to do very well, especially with the GDP growth continuing to, probably expecting to show a leg up. So, I mean, these are the spaces where I think one can find reasonable value if you have to really be invested in equities. It's not compulsory that you have to be at 4% off the all-time highs with all the risk involved. It's not something that you have to be compulsorily there.
Okay, sane advice. Mr. Bhat, thank you so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time.
Pleasure. Thank you.
Well, that's the long and short of the conversation on the fundamentals, but 0.5% higher, not a bad start.
Yeah, Neeraj, and I just want to highlight a few stocks. PC Jewelers is now up 11 to 12%. Let's not read too much into it because the stock was down on Friday's session, almost 25% lower. But something like Merck, remember now that one's reacting to its numbers. Now it's trading around with gains of nearly 10%. And if you look at the numbers, the revenues were definitely healthy this time around. I think the operating performance is the one where a lot of margin expansion was seen, 13.8% versus 9.9%. And now the stocks also crossed the 2100 mark, which is clearly suggesting that the street is rewarding good earnings, Neeraj.
Yeah, and some transfer as well of some business. So multiple things happening out here to 2102. that stock too is doing really okay and trading at new life highs for itself, or 52-week highs for itself. But take a break. Wonder what Hathway and Den Networks would be doing today, because the last few days they've been up and about. But as cable TV digitization is nearing completion, what would the way ahead be like? The CEO of Den Networks, Mr. N Sharma, would be joining in to talk about that. And a bit later on, we'll decode the RBL Bank's Q4 earnings with Managing Director Vishwavir Ahuja.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
Thanks for being with us on Indian Open. Let's get in the management of Den Networks. Remember, Hathway, Den, the last couple of days have been on fire. Today, slightly soft. But the question mark is whether the direct fiber business, fiber to home business from companies like Jio and Airtel can disrupt this space, and what's happening to the broadband space as well. Let's ask the questions to Mr. N Sharma of Den Networks. He joins us right now on the show. Mr. Sharma, good having you. Thanks so much for joining in. Let's start off with the cable business first, and start off with the subscriber addition that has happened over the last 12 months, and whether it can still happen materially over the next 12 months, considering that phase 3 and phase 4 are almost done now.
You are right. Around 12 months back or so, the main focus used to be to digitize remaining portion of the country. Let me tell you, phase 3 is already over. Almost 10 months back it got finished. We wound it up. But certain portions of phase 4 are yet to be done across the country, and not just by us, by all the players. And that is very well recognized across the board, and it may take another, I would say, 6 to 8 months for winding up the leftover portions of phase 4, that is deep rural areas. and everybody is on the job, and it will be done so. And in the last 12 months or so, our phase 3-4 boxes that we have seeded is close to 5 million. Overall, we have a tall figure of 11.5 million digital homes, out of which 8.5 million are paying digital homes.
Okay, and so how would ARPU shape up, Mr. Sharma? I would presume that Tier 1 and Tier 2 ARPUs would nearly be double of what Tier 3 and Tier 4 would be. So how would the blended ARPUs be like?
You are absolutely right. 2 years back, even Tier 1, Tier 2 used to be at a very low level of ARPUs. In Tier 1, we are drawing a ARPU of 144 rupees, which used to be 120 rupees a year back. And if you go back 2 years from today, it used to be in the range of 60-70 rupees in phase 1. Phase 2, today's ARPU is in the range of 112-113, which used to be 80-90 rupees around 12 months back. And if you go still further back into the tune of 2 years, it used to be in the range of 50-60 rupees. So like that, phase 1 as of date, I would say that we are getting 50% of subscription revenue being collected by the cable operators from the ground, from the subscriber. Phase 2 is close to 40% to 45% of what he is collecting. Phase 3, our average ARPU today is at 76 rupees, but the average ground rate with the subscriber in phase 3 market is also very low. It's in the range of 150 to 175 rupees. So as we move forward, the cable operators of phase 3 very well know eventually they have to catch up with phase 1 ARPUs, and gradually they will be increasing their ARPUs with the subscription levels with the subscriber, and accordingly the same will be shared with us. So we have a clear-cut ambition of taking up this 76 rupees to 144 rupees in next 2 years' time. Like I explained, phase 1 journey has been successful, and I'm quite confident the path has been set, the pitch has been laid, and there is no reason that this 76 doesn't move to 140 level in 2.5 years' time. 50% of our universe, our digital universe, is in phase 3 and 4.
Okay, Mr. Sharma, what's the kind of growth that we can envisage as a result of the subscriber addition and the ARPU growth that you mentioned in the cable business from here on for the next 2 years?
Neeraj, I would like to elaborate that the subscription levels in phase 1 have already, as I said, in the range of 40 to 50% of what is subscriber paying. Definitely there is headroom to increase the subscription, for which the talks with the broadcaster and all my peers are already on. The discussions are in active stage. There you will see a lot of changes in the bouquets, in the packages that being offered to subscribers, so that overall revenues can be taken it up. Now, one growth would be on ARPU. Let me elaborate further that while we were seeding SD boxes, we didn't lay focus on HD. So now going forward in next 12 months, we have a target of converting 10% of our SD base into HD. The moment we are able to do that, that again gives us another provision of bringing in 60 to 70 rupees extra per box on HD subscriber. If SD subscriber is paying me in the range of 140, so you can easily say that after 12 months or so, in the same universe from 1 million subscriber, I should be able to get 60 to 70 rupees extra from my over and above my SD subscription. So one is overall increase in the subscription rate. Second is HD. Third is gradual increase in number of boxes going in phase 4. As of now, the run rate is in the range of 40 to 50,000 boxes per month, which will be there for coming 5 to 6 months. Phase 4, our ARPUs as on date, while I am talking, the Q3 reported numbers were 66 rupees. Phase 3 was 76 rupees. So definitely there is sufficient scope for increasing the number of boxes and accordingly the subscription going up. Your question on reported and unreported, let me highlight here. All the boxes that are activated in the field are 100% reported, and we have a system wherein if a box doesn't pay us for more than 3 months, we knock it out of our declaration and is considered as dead boxes. And we have provided for all the dead boxes that exist in our universe. So in case of DEN, I can proudly say that it's the system that has taken over, like it happens in the case of telecom players, where if the subscriber has paid, he keeps getting the service. If subscriber doesn't pay, the service is withdrawn.
Okay, let's shift focus to the broadband business. What's the kind of subscriber addition you envisage and the monthly ARPU in the broadband business over a period of the next 1 year?
Well, we have the business plan laid out with clear-cut understanding that we will be operating in the range of 550 rupees ARPU, plus minus 50 rupees depending upon situation to situation. Knowing very well the kind of stress there on the tariff. And when I am talking of 550 rupees ARPU, it is for a speed of, on an average, a speed of 50 MB with unlimited data consumption. So today any telco is offering 1 GB a day, whereas I am talking of unlimited data consumption. Today the average speed through various telcos is not crossing 9 MB. That is in the best case basis. On an average it is in the range of 5-6 MB. Here I am talking for a speed of 50 MB minimum and going up to say 60-70. Then depending upon as the speed increases and there will be different packages, and I am sure the subscriber will be happy to pay for those packages. So the tariff that we propose is quite attractive and competing, suiting the environment as on date. And for your update, the data consumption that we have seen in last couple of years has been manifold increasing. 2 years back, the data consumption of our broadband subscriber on an average used to be 20 GB. Last year, we reported it in the range of 60 GB. As of now, while we are ending Q4, Q3 number was in the range of 80 GB. So you can see there is explosion, I would say, courtesy players like Jio, Airtel, Vodafone, all these players in their warfare have enabled a sort of data explosions, and we are consciously aware. That's why we are talking of unlimited data at a higher speed. Then definitely we'll be having a relook and redefining the whole process depending upon how the environment hots up. When it comes to subscriber addition, as of now we have 2 lakh subscribers in city of Delhi primarily, a few thousand in Kanpur. Our ARPUs in city of Delhi is dropped down due to various obvious reasons, and as I explained, tariff stress on the tariff, it's in the range of 600 rupees, whereas Kanpur the ARPUs still are in the range of 800 rupees. And going further in a year's time, in 2 to 3 years time rather, we plan to increase the subscriber base by another 6 lakh subscribers. So overall, after 3 years, you can say our subscriber base should be 8 lakhs.
Final question, Mr. Sharma. What about capex and debt levels for DEN?
See, as far as capex is concerned, cable doesn't need any capex. It's all done. It's now an empty business, and year on year the subscription growth and whatsoever increase in ARPUs that we are going to bring in. There is no subsidy on the boxes. HD boxes that are being seeded are being sold on cost-to-cost basis. We are not extending any subsidy. Entire money is being recovered upfront from the subscriber. Only then the box goes out of the system. So cable doesn't need any capex. And for the broadband plan, since we have already fiberized our infrastructure, the infrastructure is already in place. Not much of capex would be needed to roll out this broadband plan that I have elaborated. I am talking to the tune of 100 to 120 crores in the next 3 years. First year would not be needing more than 30 to 40 crore of capex for rolling out this kind of broadband plan, limited to our network.
Okay, we'll leave it.
That all will be managed through internal accruals. I need not raise any money for that.
It's good to know. All the best, Mr. Sharma. Thanks so much for taking the time out and giving us that perspective. That's Den Networks, optimistic on both the sides of the business. Well, Vishwavir Ahuja would also likely be optimistic. The numbers met street estimates. Let's get in the management. Amit Sarkar, of course, caught up with Mr. Ahuja and begin by asking him about the factors behind the strong quarterly performance. Listen in.
The momentum in the business has been strong across the year, actually, and across several years now. In our 7-year journey, we've actually grown 40 times in size and more than 50 times in profitability. So, just to set the context. In this current year, yes, indeed, we grew across the board, on the average over 40%. And all our businesses, which is the large corporate business, the commercial banking business, which is the mid-market and the SME business, and then the various components of our non-wholesale businesses, namely the financial inclusion microbanking business, the card business, the LAP business, and some personal lending businesses that we do. So these are the various 6 components, if I may put it that way. And all of them experienced very strong growth. At the same time, businesses grew in a very solid and prudential manner. In other words, as you mentioned, asset quality was also well maintained and in fact improved. And margins reached an all-time high this time around. So there are, of course, several factors, why this has been happening and why that momentum should even continue in the future.
So you expect this momentum to continue in future, and what is the kind of loan book growth and the net profit growth that you're expecting for the financial year 2019?
So in mid-2016, just prior to our IPO, we put out a sort of a 4-year, guidance, let me put it that way, or rather a guide path to 2020, where we had suggested certain financial metrics, and we are actually tracking very well to those metrics. And we are kind of at the halfway stage right now, and where we are indicated that the growth in the businesses will be tracking to 30 to 35%. The ROAs and ROEs will also improve consistently. Cost-income ratio, which was at that time close to 59%, by 2020 will come down to 51-52%. And CASA will also improve year on year. So actually, if you track to that guide path, we've actually achieved and exceeded on all financial metrics. Now that 2 more financial years are remaining to that, we are very confident that we will be able to track to the guide path even in the next 2 years. And if I may break down what I meant, is that the 30-35% growth guidance remains. The improvement in margins, which is now almost touching 4% in terms of NIMs, we are sort of happy there, but it may further improve a few basis points. And ROE and ROA expansion will continue to happen. And the efficiencies in the business, now that many businesses are at reaching good levels of scale. So both combinations of economies of scale, efficiencies, better cost of funds, better asset mix, and therefore healthy yields, all will lead to these kind of outcomes.
On the cost side, where do you see your credit cost to be in financial year 2019? I assume in financial year 2018 it was close to 95 basis points.
That's right, it was 96 basis points. Now there are the so-called regular costs of doing business, and then there was a one-off effect that we experienced post-demonetization on our then microbanking book. So if I was to remove that is about 18-19 basis points. If I remove that, the rest of the business is operating just under 80 basis points of credit costs. We expect that to come down further. It has come down, it will come down further. As far as that business is concerned, on that book, the provisions had to be taken in March 18 and March 19. So the March 18 provisions were taken, some balance provisions have to be taken in the current year. So if I strip that out, then we are actually seeing credit costs come down to even below this number.
On the gross NPA side now, for the agri segment, it has risen to around 4.15% versus 2.89% in the last quarter. Do you still remain cautious on the agri side, and when do you expect the agri segment stress to stabilize?
So the agri, how we tackled it, the fact is that there is stress in the agri segment, and there are multiple external factors for that, and those have not gone away or going away. So at the end of the day, now we really need to see how we need to deal with that business. So the first thing we did was to tighten that business itself. Also in terms of proportion, we brought it down from 7% to less than 5%. So it's a much smaller, if I may say, base of business. Then we broke that business down into what is more corporate type, linked to the corporate, where there are corporate linkages, and some which are pure retail farmer-led. So we've separated them, and now the corporate type will sort of be handled under the commercial banking umbrella, and the retail type will go towards the retail side. So I think with passage of time, this portfolio will be tightened, and we don't expect it to worsen much from where it is, at the end of the day. And just in terms of sheer materiality, the materiality of that is actually going down more and more.
So what were the slippages during the quarter? And there was also one corporate banking account which was expected to be resolved in the fourth quarter of financial year 2018. So has that happened?
Yes, it did. Firstly, the slippages have been coming down, and they have come down even in this quarter. So, that's the straight answer to that. And that one corporate account was actually resolved as per our indication. Yeah, and therefore, that is no longer, if I may say, an impaired account. It's a standard account.
So RBL Bank's exposure to the power sector is closer on 4.3%. Now Axis Bank, we saw they saw huge slippages because of the power sector account, and they say that around 40% of the power loans are now NPA. What has been the experience with RBL Bank when it comes to the power sector?
So our sectoral exposures are not because we decide to lend in a particular sector. These are corporate linked. In the case or cases that you're talking about, these are all very high investment grade A+ rated companies. So actually speaking, and these exposures are not necessarily linked to project. Yeah, these are maybe we are giving them sort of working capital loan or part of their banking group from that sense in terms of their ongoing business requirements. So these are very healthy exposures when you look at the underlying asset quality. So actually we have no concerns as far as our so-called power sector exposure is concerned. They're all performing, they're all standard.
Lastly, on the inorganic growth opportunities that you are looking, which are the areas of interest for the inorganic growth perspective that you have?
So I want to be very clear that we have no inorganic plans, on the table or on the horizon. Yeah, I think we are seeing such good growth momentum in our various businesses. And if I may take a minute to clarify, the retail businesses, which is the card business, the financial inclusion business. For instance, the financial inclusion business, just in the last 12 or 15 months, today has been growing at close to 60% per annum. And today our total portfolio, 90% is the new business we've done post-demonetization. And that is operating at, less than 30 basis points of NPA, or 99.7% collection rates. So it's a very good, high-quality, fast-growing business. The card itself, has been a great, if I may say, offering from the bank. Today, we've reached the sort of top 5 banks in the country in card acquisition and in card spends. So there is a lot of growth momentum sitting in these businesses. And our other businesses, even on the wholesale side, are growing well. On the wholesale side, we are seeing some opportunity in the next 12, 18 months emanating from the challenges of some other banks in that space. So there is some opportunity to get some market share there. So what I'm trying to say is that rather than getting distracted, there is enough opportunity to extract, in our existing range of businesses.
Just on your market share point, I would like to understand what is the current market share and where do you see it 2 years down the line?
So our market share is very small. I mean, taken together, we are a 40,000 crore advances bank. And so it is obviously in basis points as far as the entire industry is concerned. So I think that stage where we start measuring market share is a bit away. Yeah. And right now, I think our focus is to ensure that we consistently grow, handsomely, we grow prudentially, we grow sensibly, and we grow profitably to make sure we reach a certain size and scale in a few years when actually the so-called market share question will start getting more relevant.
Okay, that's Vishwavir Ahuja in a candid chat with Amit Sarkar. But with that, it's a wrap on this leg of Indian Open. Keep in mind, the markets seem to be doing reasonably okay. About 0.4% for all the key benchmark indices. The Nifty Bank about 0.5% higher. And IT is making a bit of a comeback. So Nifty IT too should be in focus. Mid-cap, large-cap, IT, all of those pockets seem to be doing rather well for themselves. Wrap it up on Indian Open. Up next is the FNO show. Thanks so much for watching.